Okay, our top 5 tips for EMI share option schemes. There are, of course, a variety of other share option schemes that a company can implement, and you really need advice on what all the different options are available to you. But EMI share options are tax efficient, they're quite involved, they're not for everyone, but an area that we commonly advise on. So, top 5 tips. Number one, generic scheme rules. So, what you should do is you have generic scheme rules that apply to everyone in your option scheme, and then have separate what we call option certificates or option agreements that relate to each individual who you're granting options to, and that allows you the flexibility to put certain different terms on how the options are going to work relating to each specific individual, and that gives you greater flexibility. Number two, agree a low valuation with HMRC. Don't worry about that impacting what the valuation of the company otherwise could be. HMRC are well used to all the reasons and arguments being used for the specific context of EMI share option schemes, agreeing, incorporating things like minority shareholder discounts, all the rest of it, agreeing a specific low valuation for the purposes of EMI, which bears no reference to what the valuation of the company could otherwise be. That allows you to set the actual option exercise price at quite a low level for the employee, so you don't have to find, or the employee doesn't have to find much money to exercise those options and get the shares. You can, of course, set if you like, the value, the price that the employee has to pay to exercise the options and get the shares much higher, but that you still got you've got the tax efficiency and the tax breaks if it's lower, and as long as the price you set is above that. Number three, the shares that they get when they exercise the options, you can make those, they can still be classified as ordinary shares, but you've got quite flexibility in how you structure those. So they can be what you call alphabet shares, which are still classed as ordinary shares for the purpose of EMI option schemes. And those can be non-voting, so you don't have to worry about once the employee has the shares, them having voting shares, and they could have varied rights to dividends. So they again, you as the board person managing the company, gives you greater flexibility. You could pay, even though they might have a shareholding of say 5% eventually, you could pay them dividends, not pro rata to that, but less than that. Or if they've done really well, you can pay them tax efficiently and give them a dividend that is greater than their 5% shareholding by adopting an alphabet share arrangement. And then the key thing is that the alphabet shares, they've got full rights to capital. So that's meant to be the main incentive, is that they stick around and there's an exit event, the company's sold, they're going to get their, whatever capital gain is made or the purchase price, they're going to get 5% of that if they've got a 5% shareholding, and that's clear cut. Number four, guidance letters. So that's an extra step. Not everyone does it, but we think it's important to put decent guidance letters together for both the employer and the employee that really explains the ins and outs of the EMI share option scheme, how it works, and gives all that explanation within a formal letter that both the employer can keep and the employee can have. Otherwise, there's a danger if these things aren't explained properly, the employee, they're quite complex, and if the employee gets all this documentation, signs it, well, this is great, but I don't really know what this is all about, or what, if they don't understand it, it's not really going to work as well. Lastly, point number 5 is, yes, you're granting the EMI share options with in the hope that the employee's going to want to stay around until there's an exit event. Then they get the bonus, as it were. That's what it's all about. But there could well be no exit event. And EMI share options, they have to be exercised within 10 years. Otherwise, you're not going to get the tax benefits, all the rest of it. So you've got to really have that 10-year limit in mind. And we suggest that the option scheme documentation addresses that 10-year limit, and it puts something, or we always put something in there whereby it says if there's been no exit event, you've still got your options or share options before 10 years, then there's a specific provision that means you can exercise those options before the end of the 10-year term, and there's an agreed mechanism buyout whereby you're going to get something if you want for those shares, or you can keep them at that time. So that's an important area to consider that we recommend as well. But I hope that's useful, and we'd be very happy to discuss how we can help anyone who's thinking of implementing EMI share option scheme or any other type of share option scheme. If you'd like to get in touch, please give us a call number on the website or use the email address wewillhelp@jonathanlee.net, also on the website, and we'd be happy to schedule a call with you.